Hello, everyone. Welcome to the Options Moneymaker and News Cycle Trading and Analytics Q&A. Today is Wednesday, May 3rd. I have Kristen Kane with me. Hello, Kristen.
Hello there.
So for those of you that don't know, I am Erin Rumley. Kristen Kane is our lead host in our live trading room. So she's the voice that you hear every day in our live trading room, helping identify and reinforce the Aurora trading system signals. And then something that Kristen really emphasizes in our live trading room is learn to trade and trade to earn. And she's created these steps here on really how to go from not knowing anything about trading futures to becoming a futures trader. And so, Kristen, I want to have you talk a little bit about this.
Okay, great. Thanks, Erin. And next week is going to be a fantastic week. If you're going to be joining us in the live trading room, you'll see these 4 steps live in action. We try in the live trading room to first start and help everybody learn how to enter a trade. We have 6 different signals that can be taken that's part of the Aurora strategies. And so we want to make sure that you're very confident in just knowing how to enter a trade. Once you've got that under your belt, then it's time to move on to the next step, which is learning how to manage your trades. So now I'm in a trade. Where's my profit? Where's my stop? How do I exit the trade early if need be? Where do I lock in if necessary? So how do you manage that trade? And then I'm actually very excited. We're getting closer to getting back to doing some demos of the Dome. So that's the actual tool that you use to trade. We use a particular tool to trade, and we can demonstrate some of that in the live trading room, just to kind of show you how to use the Dome. It's so important for you to be an expert in using whatever trading platform you use, so that you can effectively manage the Dome, especially when we have some of those high impact those impulse bars. And then finally, we talk about learning when to stop trading. So we have over a year's worth, almost 2 years worth of data that we look at, and we can break down by time periods, by days. We can look at averages. We can look at any one particular part of the strategy, all of the different trades in our strategy, and we can help you analyze that so that you can come up with your profit goal for the day or for the week. And then how do you manage that throughout the day so you can keep your profits? How do you know when to stop trading so that you can continue to trade to earn? And of course, we always, always, always suggest, if you're just starting out, start in sim and make sure that you can have very consistent results in sim before switching to live. And that's true even if you're just trading markets. Let's say you've been trading NQ for a while and you want to try out oil. Our recommendation is always start in sim if you're starting something new.
Absolutely. Sorry, my mouse disappeared on me for a second there. Uh, and we really can't reinforce that enough, that starting in sim is the most important thing for you to learn how to trade, whether you're new to futures trading or new to options trading, without that pressure of the real risk of live dollars, and get comfortable with your trading platform, get comfortable with how you want to trade, what your risk tolerance is before you move to live. So our averages for our Aurora system, there's 4 different parts that we track of the Aurora system, 2 on NQ and 2 on oil. Our PB system consists of the signals that we call the PB3, PB35, and PB13. For those of you that are new to Aurora, PB3 is essentially a signal on the 3-minute chart without any conflict on the 5-minute chart. A PB35 is alignment between the 3 and 5 minute chart, and PB13 is alignment between the 3 and the 10-minute chart. And that averages about $1,200 a day, trading from 7 a.m. to 2 p.m. Eastern time, only one contract. And then we also have what we call the A signals, which is on the 5 and the 10-minute chart. It's this 3A, 4A. The way we came up with 3A and 4A is just an alignment between 3 signals versus 4 signals, and then trading fractals as well. And that on NQ is averaging about $900 a day. And then again, on oil, we have these same exact signals, except for oil incorporates the 15-minute chart for the A's, averaging about $700 a day. And then on the PBs, averaging about $900 a day. These all assume that once we have a day where we hit $1,700 of loss, we're done for the day. We're not going to keep trading to incur more of a loss. This also includes FOMC week. We are currently in FOMC week. So PBs tend to underperform in FOMC weeks. We can see here that FOMC mainly affects NQ. We've done research and it doesn't seem to have the same effect on oil, so we don't have that tracking as much. We did the research and it didn't seem worth continuing to track, but we do track it on NQ. And you can see just on a weekly average, our PBs are at $2,500 a week compared to our A's are $4,500 a week for only the FOMC weeks. And then I have it broken down into the different days of the week as well. And just overall, A's have a higher performance rate during FOMC week. So if you are trading the Aurora system and it's an FOMC week, we encourage you to look at the A signals during those weeks based on the historical averages that we've seen. They're just generally the better system to trade during these weeks. And then this will be probably the last time we talk about this, but Infinity Futures is being discontinued. This is not news. We've been talking about this for quite some time now. Based on my last conversation with Glenn and what we talked about during last Q&A, he recommends just going straight to NinjaTrader because it's going to include Trade-Evate and the pricing has been all adjusted to be the exact same, NinjaTrader versus Trade-Evate. If you have any questions about this, just go ahead and contact Glenn directly. He will have the answers for you. And then what does Options Moneymaker and News Cycle Trading and Analytics offer? We offer the Aurora trading system. This is the PBs and the A's that I was just talking about. The trading system includes the technical indicators available for your own TradingView chart. You can trade them on really whatever you want. So futures, doesn't have to be NQ, it could be ES, it could be the micros, it can be corn, anything that you are familiar with. You can trade it using options. And then you can also trade it using stocks as well, just utilizing different time frames for the options and stock entries. It also includes the live trading room access, where if you are new to the Aurora system, the live trading room is great for reinforcing the signals. Kristen points out the entry signals, explains how to identify when a signal or what signal may be coming up at the beginning of the next bar, how to manage the trade, how to evaluate the market to maybe adjust the rules slightly. I know we've seen more of those narrow trading ranges. Kristen and I have talked about that. When we get to 9 points, we like to lock in 5. Well, if we're seeing more of that narrow trading range, locking in 5 points a little bit sooner so that it doesn't end up becoming a losing trade. So the live trading room has benefits there where also you don't feel like you're alone, you're trading alone. Trading can be a very lonely activity, and the live trading room opens you up to the community and to Kristen for that support there. It also includes education on the PB system, on the A system, on futures in general, and on trading these signals on options. And then we have the monthly Back to Basics recording. So this is what Kristen does every month, really diving deep into focusing on one system at a time and providing that education, that reinforcement on identifying those signals. Then we also offer options education. There's Profit Builder Plus, which is great for anyone that is completely new to options trading. It takes you into the basics and also allows the ability to have lower risk on trades by talking about spreads instead of having the more expensive long options. Keeps you on credit spreads and debit spreads, which ends up reducing the risk on trades. And then if you are familiar with options and you're looking to open up your education to more advanced options trading, then there's the advanced option spreads, which talk about calendar spreads, diagonal spreads, the market tamer, managing those positions, and then seed iron condors. Iron condors are 2 credit spreads, a put credit spread and a call credit spread, and a seed iron condor teaches how to really harvest these profits, grab profits on a spread that may not have an overall profit to it. We also offer our personal trading plan. This is a planning tool that helps you forecast out where your performance may be at the end of the year based on a run rate tracked on how you have historically performed. So we always recommend starting in sim, and you can use the personal trading plan with your sim performance. That will give you an idea for your risk tolerance, what your performance is, and then also can help you, once you've transitioned to live, can help you evaluate how much you want to risk and when is the appropriate time to increase your contracts if you're looking to for more profit opportunity, but you don't want to trade more. You don't want to look for more one contract profits on the day. You can always up to 2 contracts, and it helps by evaluating your risk percentage of your account balance and lets you know where and when you can increase your contract size. And so it has some great flexibility for you to determine your own risk tolerance and also your max contract size that you want to go to. And then we do also offer one-on-one coaching for anybody that is looking to really accelerate their education, their futures education, looking for a specific goal in mind. Kristen's there to help you find ways to achieve that. And then, of course, if you have any more questions or you are looking for more information on these services, you can reach them at these 2 links. One's at newcycletrading.com/services. The other one's at optionsmoneymaker.com/what we offer. And so we'll go to questions. Right now, I'm not seeing any questions out there, so we'll give it a little bit and see and wait for some to come in. I talked about the trading range being a little bit more narrow than what we had been seeing recently. I've been doing some research as well, and we are seeing the volatility just be a little bit lower than where it had been the end of last year. So I'm going to switch to a chart. So this is the continuous contract on NQ. I want to use the continuous contract because I'm on a daily chart. So generally we don't use the continuous contract for our alerts, but since I'm on a daily chart, this is where I want to be. This is the average true range, which is a indication of volatility. And you can just see that this time span is from June of last year till now. So we're almost at a full year. And you can see just the volatility keeps getting lower and lower and lower. We can also look at the volatility index for the NASDAQ. So we want to look up here. So here's the volatility index for the NASDAQ 100. And again, volatility has been decreasing. So when we see that lower volatility, we generally see narrow trading ranges. We see, let's scan back and see the last time we're at about this range. So December of 2021 is about last time we're in this sort of range. And then of course, volatility generally picks up during that new year, and we absolutely saw that. We generally will have some dips in volatility during the summer months. That's not uncommon, but we're just seeing that lower volatility. We, of course, had the Fed news today about raising interest rates, and so volatility ended up peaking, starting to move back up higher. We'll see if that continues through the rest of the week. Maybe this is just some anticipation of that news, and then we'll see some bouncing back here. But it's important to really have a good picture of whatever you are trading. So when we start to see volatility become lower, there's always little adjustments that you can make to your trading. We already talked about locking in profits a little bit sooner. Chris and I were talking about how we were repeatedly seeing profits get to about 8 points and then reverse. Well, 10 points is where we're looking for. That's where our limit order is. 9 points is generally where we have okay, we're going to lock in 5 points of profit to guarantee ourselves a profit. So now with this lower volatility, that smaller trading range, we're looking at, okay, well, if you have profit and maybe it's 8 points, maybe it's even 7 points, locking in something may be the best decision for your account to guarantee yourself some sort of profit, especially again with this smaller trading range. Kristen, I know you sent me a message about it. I don't remember exactly what it was, but you had been pulling up specific time frames and showing it in the live trading room, just how I believe how small the price scale was. Is that correct?
Yeah, correct. We've been looking at that a lot. Of course, pre-market is a place where we're definitely looking at it, seeing range on our 3-minute chart where our price scale bar over bar isn't getting us past like 2.5, 4 points. We also will look at the 5-minute chart on, and this is mainly on NQ that we're looking at that. And so pre-market, before we get into the live trading room, that 7 to 8 hour, things are really slow. And then really from the 8 o'clock till about market open, there's still a lot of it's just kind of flat, not going anywhere.
Right, and we're used to those pre-markets already being not necessarily flat, just a smaller trading range because we don't have all of that volume that shows up at 9:30. Well, when we hit this lower volatility and the smaller trading range to start with, those become increasingly more difficult to see trends during. And so me personally, what I like to do is I like to keep my charts on auto so it fits. I don't mess around with the price scale. I keep it at auto. I'm not dragging it up or anything like that. And then I pay attention to, okay, what is my range that I'm seeing on my price scale? And then that gives me a pretty good idea of the type of movement that we're seeing, really. You know, as we start to see more prices, we're going to have a larger range on the price scale. So here, let's see, this is all Fed, right? So we saw that reaction here. And so we have about a 200 point range. Well, and then if we're going to now, which is, you know, after market hours, get this. We have, and I think it's because I moved it too much. I also don't have Bollinger Bands when here we go. I don't look at Bollinger Bands when I am looking at this and the alligator, because those are going to take into account some of that other price action with the averages here. So, but that's basically what I'm looking at, is I'm looking at the same time frame down here as well. I'm making sure that I'm not scrunching or adjusting this. So when I do see price start to have this larger range, so like here's about 300 points, and then we're going to current time frame, and that was closer to about 200 points, or 120. It gives me a good accurate representation of the type of price movement that we are seeing. David's asking if we have a history on what trades are best the day after the Fed announcement, so we have an idea of what to expect tomorrow. So that was on, it's generally the A signals. Let me switch back over to this real quick. So our A signals are generally the best during FOMC weeks, which is when Fed announcement is. And you can see on Thursday, where did my mouse go? Thursday averages about $700 a day, which is pretty similar to PBs, which is about $650, but Fridays is $1,100 a day, which is nowhere near the smaller performance that we see for PBs. So generally we're looking at A's for the FOMC weeks, which are the weeks where there are Fed announcements.
One of the other things that we do, if you were in the live trading room today, you'll know is Wednesdays of FOMC week, we have we take time to just focus on oil, the performance on PBs and A's. I think A's are, we still see some nice profits on A's, some okay profits on A's, but we choose to just spend the whole day focused on oil. So that's one of the other things that's nice about in the live trading room is we have the opportunity to look at different charts as well. We've been talking about that a lot lately, how to set up charts, maybe if you want to look at trading Aurora on something else, maybe RTY or the Dow. I know Aaron talked about that earlier. And so we can offer some recommendations on how to get started with that in the live trading room as well, and possibly even spend some time in it like we did on oil today.
Absolutely. And so while we do primarily focus on NQ, it is not an NQ trading room. So anytime we feel that it is important to look at something else, to talk about options, to if we've done some research and we want to show you on a different equity, that's something that we'll switch to. And the great thing is these signals, how to follow the signals are all the same, right? When you see the 3A signal come on, that's your entry. When the PFO disappears, that's your exit. That's going to be the same whether you're on NQ, ES, RTY, oil. And so even though we may switch to a different underlying, we're still reinforcing the education there. So the education's still there to make sure you understand how to identify these signals. And diversification is always important as well. You know, when NQ or ES get into that low volatility, or even if you see low volume, or we've had this happen with options before where they were not behaving the way they theoretically should. In cases we were having price go higher on a stock, but the option we were holding was a put. So you would think, well, what should happen is the put should decrease in value, and it was increasing in value. We were getting a profit even though the stock was going higher. So there were funky things that were happening in options. And so we paused our options trading to go and focus on futures, which is more of that dollar per dollar point, really point per dollar movement. When it goes higher, there is, and you are long on the position, you are making money on it. So Lyle, when we talk about having a NinjaTrader account, it's because NinjaTrader includes Tradevate. So we are on Tradevate, but a Tradevate account doesn't include NinjaTrader. So per Glenn's recommendation, he suggested going with the NinjaTrader account because you will get Tradevate. So we did demos with both, and we are on the Tradevate is where we are going to. But so yes, we have traded with NinjaTrader, but it's not the one that we will be doing our primary trading on. We let our prop traders decide based on what they are more comfortable on, and they're more comfortable on Tradevate. Rob, it's just, he was asking about if we had traded on NinjaTrader, and we have during the demo way back when this was announced first that Infinity was going away. We looked at both Tradevate and NinjaTrader. We traded on the demo there, and then we gave our traders the option of what they preferred, and they preferred Tradevate. So we don't show a DOM. In the live trading room, we are focused on the signals. Occasionally, Kristen will show a DOM when she is talking about back to basics, and it will most likely be Tradevate when we do that. But we do not show a DOM daily in the live trading room. And as we talked about quite extensively over the past few months here, or really ever since we received the notification that Infinity would be going away, is that it doesn't matter what platform you choose, as long as you are comfortable with that platform. Its margin requirements make sense for you. You know how to, really know how to trade it. And we've had plenty of time for you to become comfortable on a new trading platform, whatever that may be. And knowing how to enter and exit trades and making sure that it aligns with your trading style. The great part about Tradevate and NinjaTrader is they have tons of tutorials online for you to use to really enhance and accelerate your learning curve of a new platform. And also their support team is very helpful as well. I'm not seeing any other questions out there right now. We'll give it another couple minutes. Kristen, I don't know if you have anything to add or.
No, just wanted to make sure that I reminded everyone that next week again is a back to basics week. So we'll be reteaching our PB, all of our PB strategies. We'll go through the A strategies. We'll be focused mostly on NQ because there's usually a lot of activity on NQ. So that's where we do that basics, and we record those, and those can be available to our subscribers as well for some additional reinforcement education. So that back to basics week will be next week. Usually Monday through Thursday is when we do the recordings for the first couple of hours of each day.
And again, as she said, they're recorded. So if you're an Aurora subscriber and you're unable to be in the live trading room, during those Back to Basics, don't worry, you're not missing out. Those recordings are sent to you for you to view at your convenience. Okay, I don't see any other questions out there. So we're going to go ahead and close the Q&A for tonight. Thank you all for joining us tonight. We will send out this recording tomorrow. And then for all of you that are Aurora subscribers, we will see you in the live trading room. Have a great rest of your night. And thank you, Kristen, for being here.
Good night.